10-minute stock trader takes calculated risks, understands that the treasure lies in knowing the data, doesn't guess at trading, follows their plan, doesn't blame others, takes responsibility, and knows why the market works. A 10-minute stock trader is smart. A 10-minute stock trader understands that they can make the world a better place. They spread joy to others, they follow their dreams, they build each other up, they use money as a tool, and they spend as little time trading and as much time living as possible. Welcome to the 10-Minute Trading Room, where we take the guesswork out of trading.
Good morning, traders. Happy Friday to you. Yes, we are live right now. Good morning. I'm glad that you all made it today. I'm super stoked about today. Today has been a culmination of a lot of frustration, but also a lot of excitement when I finally figured this out. Super glad that you're here. I'll tell the story about how I figured this out as we go, and it should make total sense to you. But this is a trading hack that made me over 100% gain last week, and it is now officially part of our strategy in the 10-minute trading room. So glad you are here. Glad you're excited about it, and hope you're as excited as I am about it. I'm really excited about it. Josh, good morning to you. Glad you're here. Abe, good morning. Glad you're here. My friend Ernie, who's in the trading room every single day with us. Glad you're here, my friend. All right. So as we go, I do have a request for you. I need you to get a pen and paper. In fact, my pen and paper is over there. Oh, here we go. I have extra pen and paper near me right now. This is super key and critical to your success. You need a pen, you need paper. You're going to want to write this down as we go. This is going to get somewhat complicated. If you are completely new to options, this may be over your head, but that's okay. You can take this, you can learn from it. I would suggest you grab a copy of my book. This really covers in detail how to basically fills all the gaps and everywhere that you haven't learned yet. The way you can get that is at, let me type it down on the screen so you don't forget. It's secretinvestingbook.com. And the book is free. All you're doing is paying for the shipping costs. And so that way I can get this out to as many people as possible. But yeah, go grab a copy of this if anything isn't making sense. And also, we're going to be covering several of the strategies that are in here, specifically on page 124. And it's going to help you a lot. So be sure to grab a copy of that too. Let's see who else is here. Jaskaran, good morning. Good morning, Brian. Glad you guys are here. Glad you made it. So, let's do this. Before we go into this any further, I need you to make sure that your chat box is working. So if you can, please type in the letter L. Type in the letter L in your chat box to confirm that it works, and then we can move on, because I am here for you. I'm doing this literally to help you guys with learning this new spread. And the way that you can just let me know that it's working for you is typing the letter L in the chat box real quick, mainly to break the ice, mainly to make sure it's working for you. And as we go, please feel free to ask questions. It's really important. April's here. April, thank you so much for coming. April is one of our teammates here in the trading room. She basically runs the business at this point. April, thank you for coming online. All right. Varian is here with the L. Brian's with the L. Maria, good morning. Jaskaran says L. Maria says L. Jared says L. Where did I get L from? I was looking at my coffee mug, and I'm a huge Star Wars nerd, and it says, I love you to the Death Star and back. And I was like, well, there's an L right there. Let's go with that letter. So we want to be putting up W's on the board with our trades, but we'll put in L's in the chat. So, all right, let's do this. I'm going to add. There we go. Okay, there we go. So this presentation, this web class is called My Weird Trading Hack That Made Me Over 100% Gain in 1 week and How You Can Ethically Knock It Off in 10 Minutes. April says L. As we go, please feel free to spam the chat box with questions. I will do my very best to answer any and all questions. And if I miss any, type it in again, and I will do my best to answer you. And if I miss your question, please know it was an accident. I will try to come back to it. And go ahead. It's not going to hurt my feelings if you put it in there more than once. So let's do this. Let's get on with it. Let's talk about our legal disclaimer. I'll move my fat head out of the way. Basically, the legal disclaimer says that I am a professional triple black belt judo fighter, and I once wrestled a bear, but at the end, he decided to forfeit our wrestle. And so therefore, I am the king of bears. I once beat Tom Brady in the Super Bowl, and then they gave me the Hertz commercials for the Teslas over there. And then lastly, basically, I'm just a guy on the internet, and you shouldn't listen to anything that I say. But if you do, you do so at your own risk. So that's really what it says here. And I hope that I can help you out as best that I can. Angela, hey, good morning. Glad you are here. So yeah, let me know in the chat that you're here. Also, tell me where you're from. There's a few people that I've not seen here before, like Josh and Abe. Let's see, and Varian, and who else have I not seen here before? Jared and Angela. Let me know where you guys from, and everybody that's watching. Let me know where y'all are from. Let's also talk real quick. Every single time we do these webinars, every single time we do these web classes, I like to have what I call the webinar challenge. So for this week's webinar challenge, I am gifting to members of our trading room this really cool bear market t-shirt that one of our other teammates here designed. Her name is Rudes. Her name is Rudy, but she goes by Rudes. This really sick shirt. I'm super excited to order several of them today. The way that you win the webinar challenge is be part of the trading room and invite your friends to come watch live. That's really how to do it. Super simple. Just come watch live and invite your friends. Josh is from Philly. Oh, Variant's from Naples. Very cool. I think we have a book we need to send out to you. I think I saw that come through just a few minutes ago. Very cool. And Abe from Kazakhstan. Nice to meet you. Wow. Big border crossing today. Very awesome. Okay, so that's the webinar challenge. If you're part of the trading room, please invite your friends. I want to send you one of these. It's this screen in my life, but it's that screen on the internet. Okay, I want to send you one of these cool trading shirts, so please do that real quick. Now, before we get into it, I like to talk about what a 10-minute stock trader is, and it's always in our intro every single day. But a 10-minute stock trader takes calculated risks. They understand that the treasure lies in knowing the data. They don't guess at trading. They follow their plan. They don't blame others. They take responsibility, and they know why the market works. 10-minute stock trader is smart. They understand that they can make the world a better place. This is a lifestyle. They spread joy to others. They follow their dreams. They build each other up. They use money as a tool. And lastly, my favorite part, they spend as little time trading and as much time living as possible. And we're going to share with you some of these tenets, some of these concepts of being a 10-minute stock trader today. And on the agenda today, we have 3 sections we're going to go through. First is how to ethically steal my golden spread setup absolutely for free, named by our friend Brian Moore. Brian's in the chat. I really love the name. I was thinking maybe we might name it later something more on brand, but you know what? For now, I think it's an awesome name, the Golden Spread. Next, how to clone this setup in less than 10 minutes in your own account. It'll take a couple minutes once you start seeing how it works. Once you get the hang of it, click, boom, you're done. And lastly, the entry and exit rules for how to maximize profits and minimize losses. Now, everything that we are going to show you today is what I have learned personally through learning from literal market wizards, learning on my own with real money. None of this is theory. All of this is practice. And we're going to talk more about the theory behind a lot of this as well. But I got to tell you, theory doesn't pay the bills, and theory doesn't give you the same experience as actually putting things on with real money. So if that sounds like you're in the right place, type yes in the chat box before we move in. Brian says a big old C. Doesn't that sound like you're in the right place? Type yes in the chat box. And like I say, please ask questions. As we go, please ask questions. And this is actually a private training for members of the 10-minute trading room. And for everyone else who's watching live, we give you the opportunity to watch live for 3 days, and then this will come down on Monday. And this will only be available for members of the 10-Minute Trading Room. Now, the cost of admission today, while this is available for everybody, is hitting the share button. Right down below this, wherever you're watching this from, there's going to be a share button. The cost of admission is hitting the share button while you can. And like I said earlier, get a pen and paper. We will be covering a pretty decent amount of information. Generally, my presentations are a little bit unlike others. I don't like to have slides with lots of notes on everything. I like to get a little bit dirty. I like to show things hands-on, and also I like big old font. I like big old font like this. And because I like the big old font like this, we do have a lot of slides. Brian, since you asked, we have 142. It's usually 200 something slides, but really it's going to fly by so fast. You're not even going to think that there were. Angela says yes. Varian says yes. Maria says yes. All right. So today I'm going to be giving you $5,488 worth of trading education for free. More on that later on. But promise me that you won't use these powers for evil when you see how to trade in 10 minutes a day, and when you become a hashtag 10-minute stock trader like us. It's going to change your life, and I mean that completely. But disclaimer, again, I'm going to show you the process, but this does not guarantee you'll be profitable. Especially in a market like this, right, where everything's choppy to down, and there's been a lot of people struggling this year. Now, one of the people that I learned a ton from was Richard Dennis. I didn't have the opportunity to work with Richard directly, but Richard says that he could publish the rules in a newspaper, and nobody would follow them. The key to being successful as a trader is to have consistency and discipline. You got to have the consistency and discipline. And the world-class traders that I learned from all have one thing in common. They have rules. The rules is the third section of today's presentation. They all have rules, and they follow them with consistency and discipline. Like Richard says here, right? Unless you have that, you're not going to be successful. So I'm going to give you the rules today. Now, rules are boring, but if you follow them, your losses should be smaller than your wins, and your wins should be much bigger than your losses. That's why I say rules are boring, but rules make money. But I need you to promise me one thing, that you will have the consistency and discipline to follow these rules. Because when you do, you're going to be trading like the greats, the legends in trading that I learned from. One of them is my friend and mentor, Mark Minervini. He was a 97 and 2021 U.S. investing champion. Larry Hite was the first billion-dollar hedge fund manager that I got to learn from him directly. Market wizard Tom Basso, learned a lot from him. As well as my friend, best-selling millionaire trading author Steve Burns, the original market wizard Jack Schwager, and then the trend-following pioneer Richard Dennis. So I took their best lessons and created a strategy to manage a portfolio in only about 10 minutes a day. And Tom Basso, when I told him that, he said, "Man, I need to learn from you, Chris. It takes me 20 minutes a day." And I'm like, no. I'm just standing on the shoulders of giants. You're the one who figured this out. Now, my goal with this web class is to show you, number one, the only way for you to become a successful trader is through the rules that we use in 10-minute trading, like we're going to talk about today. And the only way to do 10-minute trading is with the strategies that we're going to show you and what we do every single day together inside the 10-minute trading room. So who am I? My name is Christopher Uhl. I've twice been awarded Top 100 People in Finance. I'm the founder and head trader at 10minutestocktrader.com. Been nominated for Top 100 Global Leaders in Finance, Top 10 iTunes Investing Podcast host. Been on TV hundreds of times. And my company is one of the 20 most innovative companies for 2020. And here's a few of the places you may have seen me on. But most importantly of all, for 2021, we had 172.41% return. But it didn't start out this way. I really like to stress this point, right? Nobody starts out just immediately knowing how to trade. I grew up on a double-wide mobile home in rural Texas, basically on a farm. We had cows, chickens, ducks, geese. What else do we have? Goats. We had one goat named Pedro. That Pedro would chase me around. I have never sprinted as fast as I did when I was 8-year-old Chris being chased around the back pasture by Pedro. But, I want to be relatable to you, right? And I grew up and went to a small college in Arkansas. I don't have an Ivy League degree. I didn't work on Wall Street. I don't have a hedge fund yet. But you can do this. One of my goals in life is to have a hedge fund, but I just don't have that yet. But you cannot, under any circumstance, think that you know more than the market. So let me repeat that once more. You cannot, under any circumstance, think that you know more than the market. Because trading is easy. And I know that you're probably like, oh, Chris doesn't know what he's talking about. He's a fake guru. Trading isn't easy. Trading is easy. You're just clicking buttons, following trends. The hard part of trading is mentally being okay with the losses. Let's be realistic here. Trading itself is easy. You're not actually digging ditches. You're just clicking buttons. The hard part, and the part that really drains most people, is mentally being okay with the losses and then following the rules. Because when you follow the proven rules, you're going to be successful. It's going to make trading a lot easier. So if you're ready to learn the rules, type yes in the chat box once more and we will get busy here. Rudes, hey, Rude's here. Rude's got a new profile picture too. Rude's, she designed that shirt that I'm trying to give away to you guys today. So the way that members of the 10-minute trading room can win this shirt is by coming live, obviously, and then inviting one of your friends to come live. That's simple. And I will buy and ship you a shirt just for doing that. So here is the first section: how to ethically steal my golden spread setup absolutely for free. So this is the point where you are going to need pen and paper. Like this, rubber's about to meet the road. Let's put it that way. Varian says, yes, very cool. How to steal my golden spread setup absolutely for free. So I'm going to teach you this entire thing top to bottom here. Now, we've been told that trading options is risky, right? I'm sure you've been told that. I was told that for ages. Not knowing how to trade the right way is risky. And I'm going to show you the right way and the wrong way today. Not knowing how to trade options, that's what's risky. So on this trade that we had just closed last week, I made 103% on it. In fact, I'll show you the math behind that right here. Let me build that up real quick. All right, so on September 13th, and I when I say quantity, I use quantity interchangeably with units. Now, quantity and units to you may be 10 contracts. Quantity in units to you may be 7 or 70 contracts. But that's the way that we trade, is we base everything on a unit size based on the amount of risk you want to take in your portfolio. So for this, I'm going to break it down in just units. So first, on September 13th, we bought long puts here at a cost of 468. 1 unit at a cost of 468. We also on this day sold the other part of the golden spread, and we took in 35 credit. We rolled that from the 75 strike to the 69 strike. So we banked in some profits, but kept the trade alive, and we took in 550 in credit. Then we bought an additional unit worth of puts for 368. And then when we closed all of it, we closed the 2 units that were open. This one we let expire. We had 102.99% based on the initial investment. Now, I know that this is not super detailed here, but I wanted to show you the math behind it. We started a trade, we let it work for us, we rolled it because it continued to work, and then we closed the trade with 103% return. That's what I want to get across to you here. Now, how do we do that? We did it with what we are calling the golden spread. Brian's incredible naming convention called the golden spread. Now, here's a couple things I want to show you with the golden spread. First off, the dotted line represents the current price. The blue line represents the break-even price. And as you can see, the dotted line, we're looking for a bearish spread here. As you can see, anything below the dotted line is profitable. Anything at the dotted line is profitable. Anything above the dotted line up to the break-even point is profitable. So this trade could literally go up, down, or sideways. It can go in all directions and still be profitable. That's why we're calling this the golden spread. Now, here's another trade. Here's another trade called an iron condor. This is how you don't trade, okay? This was what I thought was the bread and butter of options trading. In fact, I don't remember what year it was, but I basically put on iron condors all year that year that I was doing this. And during that time, I had an 80+% win rate with an iron condor, which, as you can see, profits if stock moves up, profit if stock moves down, or profit if it stays still. But what I had a really hard concept was stocks don't really just stay range bound. They generally trend. And when they trend, they will take out one of these sides, either up or down. And you're having to risk 10 to make 1. That's really not the way that you should be trading options. But that's the way a lot of people teach it. So in 2015 is when I really started my options trading journey. And I learned a lot from these folks here on tastytrade.com. I have interviewed both Tom Sosnoff and Tony Batista on my podcast, and I've learned a ton from them. And I'm extremely grateful for them because they got me into trading options in a way that I never expected to. And during that time, I learned all the high win rate strategies that there are out there, right? We talked about I could move up or down or sideways, and you could win almost in every direction. I learned all this, but I struggled to be profitable. And I struggled because of the risk return on these, right? Like I was just showing you a couple minutes ago, they do have a high win rate strategy. Like on the Iron Condor, it could move up, it could move down, it can stay sideways. And I had an 80+% win rate there. But 90% of the dollars I lost came from that one strategy that I thought was the be all end all. It would take 10 winners to pay for one loser when you use a strategy like this. So every time you lose, it will take you 10 full winners to make up for that. That's a pretty rough pill to swallow. One of my mentors, Larry Hite, like I said earlier, he was the first billion-dollar hedge fund manager. You can learn all about him in the Market Wizards book or in his own book called The Rule. One of Larry's quotes, and I have it tacked up to my wall behind the camera here. He says, commit very little capital, take on very little risk, and still make a significant return. Commit very little capital, take on very little risk, and still make a significant return. There ain't no way you're doing that with this. You're committing all the capital, you're taking all the risk, and you're making very little return. But Larry traded futures, which futures can be really painful to your account, just like options can if you don't know how to trade them. And I got to learn more about his futures trading, and I realized something. A long put can act really similar to a futures trade. If you buy a deep in the money long put, so imagine the price now is 64, and you bought a 70 put, so $6 in the money, it actually behaves a lot like a futures contract does. And you can do this on pretty much any stock out there. So I was like, using these long puts, I can commit very little capital, take on very little risk, and I can still make a significant return. Okay, I'm on board with this. And 2022 has been one of the most difficult years for all traders. And I'm not excluded from that because it hasn't trended. It's been down and choppy. It hasn't just been down. It hasn't just been choppy. It's been down and choppy, which has been really, really tough this year. So recently I was flying to California. I was a keynote speaker at a conference, and I had a thought. I was in the airplane and I got on our private Discord for members of the trading room, and I was like, I think I just had a breakthrough. I had this thought. What if I combined high win rate strategies with unlimited profits? Was it even possible? Now, I couldn't do much at 37,000 feet in the air, but I did know a setup that profits in almost all directions. And that's the broken wing butterfly setup. And let's talk about this one here. Current price, break-even price. You can see that anything below the current price is profitable. At the current price is profitable. Even if it goes up, it's profitable. Now, throughout this whole presentation, I want you to assume that we're only looking to trade short because of the trend being down and choppy. So I knew that this setup existed, and I've traded it before, and it's actually one of my favorites. So that was a setup that profits in almost all directions. It will lose if it goes too far the opposite direction. But I knew a setup that also has unlimited profitability if prices drop, and that's the long put. So I thought, what if I combined the high win rate of the Broken Wing Butterfly and the long put together? So let's take a look at these. So the long put is on top, the Broken Wing Butterfly is on bottom. You can see here, both of them are bearish, but the break-even point for the long put is below the current price. The break-even point of the Broken Wing Butterfly is above the current price. And the current price is the dotted line as shown in both of these spots here. Do you see what I'm seeing? This right here was the breakthrough I had on the plane. It was, wait a minute. If I need the put to move this much to profit, which has been tough because it's been down and choppy. And if I put on this trade with the long put, it makes up for the shortfalls in this area here. It's still a bearish trade. It'll still lose if it goes the other way, and that's part of trading. But it doesn't have to be so precise. So by combining the long put with the Broken Wing Butterfly, this profit area should make up for the shortfalls right here. So this is what it looks like laid on top of each other. You've got the long put, and then you've got the Broken Wing Butterfly. And combining those two makes the golden spread. Because the Broken Wing Butterfly makes up for the shortfalls of the long put in this area right here. That's how powerful this is. You've now got the trade that still has unlimited profitability if the market goes down. But you also have the trade that if the market goes sideways will profit. And if it goes the opposite direction of the trade that you want it to go, of the way you want it to go, you could actually profit a little bit more. So when you combine all three of these, or all two of these together, this is what the outcome looks like. Current price, break-even price. If it moves down, you have unlimited profitability. If it moves sideways, you are still profitable. If it moves up, you actually can still make even a little bit more money. I thought this was a game changer. Because what this tells me is that if the market is trending down, hey, this is profitable. If the market's trending sideways, being choppy, hey, this is profitable. Because choppiness basically means it's not moving very far. And even if it moves up, this is still profitable. This is the trade for 2022. When it's down and choppy, bam, golden spread. Hey, Yogi Bull, good to see you. Glad you made it. Golden spread. Now, do you see why this is so powerful? The market can chop sideways and go down, and this trade, the golden spread, is perfectly suited for it. And then, of course, it'll go the other direction, but if you think about it, it's really just going sideways here between these 2 points, down to choppy. And then, of course, at some point you decide, hey, we're not going down. We're just going to wait it out until it starts going down and being choppy. This is the trade for 2022. When I saw this, I was like, holy moly. And the first one that I put on got me over 100%. That's when I was like, wait a minute. I'm in the right place. I'm doing the right thing for 2022. And I want you to do the same. So if you haven't been taking notes, really would suggest you do so. So do you see why this is so powerful? So here's the key takeaway. Here's the key takeaway for this first section. You have to adapt to the market. right? If we had a market that was, 2020, 2021, where everything was just going up, buy anything, you make more money, it gets a lot easier. But when it's been down and choppy, it's been tough. But this strategy takes advantage of down and choppy. Who knows how long that's going to last? But while it's there, you have to take advantage and use that. So does that make sense? Type yes in the chat box if this is making sense as to why this strategy is perfectly set up for a down and choppy market. Do me a favor, before we go to the next section, I really want you to type yes in the chat box. So you can let me know that you're understanding why the golden spread makes sense in a down and choppy environment. So I'm going to give you just a second here. Angela says yes. Varian says yes. Perfect. Yeah, I tell you, when I was sitting on the plane, 37,000 feet, window seat, looking out the window, looking at the clouds over Juarez, as I was flying to LA. So I live in Texas, flying to LA, and on the westbound flight, we went like south and then back up into LA, and then on the eastbound flight, we flew north. So I don't know. Surely there's a reason for that. But I remember looking out over the mountains in Juarez, and I was like, what if I combine these two? So yeah, for sure. Angela gets it. Varian gets it. Maria gets it. Jaskaran gets it. And Ernie gets it. Very, very cool. All right. So let's go to the next section here. Now, I want to show you how to clone this in less than 10 minutes in your own account. I'm going to show you step by step how to do this. I'm not leaving anything out. Give me just a second here. I forgot. I need to log into Tastyworks to do this with you. Okay, I'll pull that over when needed. All right. So I'm going to show you how to clone this in your own account. So like I said, this strategy takes advantage of down and choppy markets, and this is how you can do the same strategy. Okay. The one tool that you're going to need is optionstrat.com. Hey, guess what? Optionstrat.com is 100% free. 100% free. Full disclosure, they do have a paid plan. And I reached out to OptionStrat and I'm like, hey, listen, I'm about to do a web class. 50% of my web class is going to be using your tool here. Do you have a discount code that I could share with people? And they're like, nah, we don't do discounts. I'm like, yeah, that was a mistake. But you know what? We don't need it, because everything we need to do is able to do on the free plan. The reason we're doing this is to visualize all the pictures I showed you earlier, just to visualize what we're doing. Jared says yes. April says yes. Very cool. Visualize the trade we're putting on, because that's really going to be important here. Step 1, build the broken wing butterfly. Like I say, you can learn all about this in my book, The Secret Investing Book. It's free. Just cover the shipping cost. Here's the page that you're going to want to look at. It's page 124. When you get the book for free, it comes with the PDF and a physical book and some other cool bonuses. But yeah, page 124 is where you're going to want to be at today to learn the broken wing call butterfly. So let's do that. Now, one of the things I learned from one of my mentors, he was the head options trading educator at TD Ameritrade. And with buying options and selling options, you have to treat them a little different. When you're buying an option, you want to give that time, right? If you're buying an option, you have control of 100 shares and you want to let that run for as long as it can, or at least give it the opportunity for as long as it can. When you're selling options, you're generally taking on more risk than buying an option. And because of that, you want to sell options for as short as possible. And you want to buy options for at least 2 to 3 times as long. And all of the profits when you're selling an option come in the last few days. Here's an example of what the time decay looks like. When you sell an option and it's 90 days out, you're not making any money. When you sell an option at 60 days out, you're going to be making a little bit. At 30 days out, you'll be making a little bit more. But when you're selling an option at like 4 or 5 days out, that's when you're getting the fastest time decay. That's when you're getting the most amount of income from that option. Brian says yes, and Brian also had a good point. Take notes. We're going to get real hot and heavy through here. Please, please, please take notes. So you make the most money when you're selling an option in the last few days. That's why when you're selling an option, you want to expire as fast as possible. So on this chart here, it would be like the last bit right there. You see the last few days, you get probably as much in the last few days as you do the entire time between 90 and 60 days. Maybe more, maybe 90 and 30 days. So step 2, at a different time, at a different expiration, put on a long put. So further out in time. Remember, we talked a minute ago when the head options trading educator at TD Ameritrade taught me this exactly. 3 to 7 days selling options. Buying options, you want to go 2 to 3 times as long as that. Which really means if you're selling an option on the weeklies, you want to go 1 strike or one option expiration further to buy, or 2 option expirations further to buy. But liquidity is important. Liquidity is beyond the scope of what we're going to be talking about here today. But that's what you're going to do. Broken wing butterfly up in the front, long put in the back. Now you can also do this going long. This is not just going short. You could do a broken wing put butterfly in the front and then long calls in the back. But it's all about the market. Don't even think about trying to go long in a market that's going down. So when you add the put further out in time, this adds our unlimited profitability. That's how we can turn this into the golden spread. It's the broken wing butterfly in the front expiration, long put in the back expiration. Now I'm going to show you the rules for getting in and getting out later, but this is the setup part. So let's do this together. We're gonna literally do 1 or 2 or 10 together. So in the chat, what I'm going to do real quick is I'm going to hit the intro bumper again. That'll give you guys some time, because in the chat, I want to put 2 stocks. I don't care what 2 stocks. Put 2 stocks in the chat, and then after the bumper finishes, we're going to do them together right here on the screen. I will build several of them. I just need you to tell me your favorite 2 stocks. So in the chat, do that real quick. I'm going to hit the intro bumper, and then once this ends, we'll start building together.
A 10-minute stock trader takes calculated risks, understands that the treasure lies in knowing the data, doesn't guess at trading, follows their plan, doesn't blame others, takes responsibility, and knows why the market works. A 10-minute stock trader is smart. A 10-minute stock trader understands that they can make the world a better place. They spread joy to others, they follow their dreams, they build each other up, they use money as a tool, and they spend as little time trading and as much time living as possible. Welcome to the 10-Minute Trading Room, where we take the guesswork out of trading.
All right. We only have 2? Figured you guys would have loaded me up here. All right. Sebastian. Hey, man. Sebastian and I have a consultation call right after this. So, Sebastian, I'll see you in just a minute, my friend. Abay. Why should we buy sell options with a longer time frame? I mean, 90 or 80. You can. Nobody's stopping you. Nobody is stopping you. But I'll tell you, when I first started trading, I was taught to trade in the 60 to 30 day time frame. 45 days was the ideal from the people that taught me how to trade. Their thought was, hey, listen, you put it on, not much happens over that time. Not much happens with the time decay. That's the research behind it, is the time decay doesn't move all that much, but you're going to be able to take advantage of that time decay and you'll be fine. The problem with going for 80 or 90 days, especially if you're selling options or buying options, is that if you go out that long, A, you're going to be paying significantly more to buy those options. And B, let's say the trend reverses against you. How long are you going to let that trend go? That was the hard part for me, was that there may have been the time decay associated with these options that I sold, but I had no idea the delta risk that I was taking, the movement of the stock risk beyond just the time risk. So this is what I found for me that works really well, which is sticking with anything 21 days, basically 21 days or under. If I'm buying long puts outright, I look at 21 days. That's 3 times as long as I would be for selling options. If I'm selling options, I look for a week or less. And then I'll always go 2 to 3 times as long to buy the options. So it's a great question. All right, Variant's got a few, Abay's got a few, and Angela's got a few. Everybody loves Tesla. Everybody loves Tesla. Ernie's got some. Abay, you are welcome. All right, let's do this. So let's do this together. You've got the 2 in the chat. I'm going to pop up optionstrat.com. Like I say, 100% free, optionstrat.com. Step 1, if you remember, is to build the broken wing butterfly. So easy way to do this in this platform. Just go up here and hit build. I didn't even click it. Just hover over build and go to call broken wing. Clicky. Now, we're in a call broken wing just on its own. Doesn't show the whole setup here like it does. In fact, let me go to what a broken wing butterfly should look like. Broken wing butterfly should look like this. We don't see that yet, but that's because we need to make a couple changes. First change is we need to zoom out on the chart range. And let's move our strikes around. This should start looking a little more familiar. Right? That looks a lot more like this. Cool. Now that we have that, let's explain what a broken wing butterfly is. We're doing a call broken wing because the market is trending down. A call broken wing has one long call, move over. Hang on, what's the word I'm thinking of? Let me go to here real quick. It'll be easier to see as well. So we're looking at the, oh, that's our Discord. Looking at September 30th. So let's change to September 30th on the options chain here. And then looking at 65, 66, 69. So you're going to go, these are call broken wings. So the left side is calls, the right side is puts. You're going to go with one of them, buying one, moving further out of the money, selling two. So it says buy one, sell two, and then move even further out of the money and buying one again. So it's 4 total legs. So 1, 2, 1. Now when I do this, I always set it up on 1 lots and then I scale. So if this is a 1 lot here, then I just go the quantity. And if I need to sell 27, I just keep clicking it up until I get to about 27. And that makes it a lot easier. But just start with 1 and then scale your quantity. But here's the way that I'm looking at it. We want to get this out of the money, but close to the money. This is important, close to the money. So we're out of the money, and I'm just setting this up on GE just to start with. And this is going to be a little behind. I see the market just opened a few minutes ago. So we're gonna roll with what we got. 65, 66, 70. The way that I like to do this is buy one out of the money at the money. Buy one at the money. Selling two, $1 away from it. So 65, $1 away is 66, 2 times the size you're getting on the first one. And then the last one, the furthest away one, you have the same quantity as the top one, but I like it $5 away. So it's $1 away on the first half, and then it's $5 total width, which is exactly what we see here. So $1 between these 2 points, $5 between this point and this point. So That's the general how to set up a broken wing butterfly. But let's work on this a little bit more. So this is September 30th. This expires in, a week from today. And you'll notice that the break-even point is 3% above the current price that this is pricing. 3%. So the stock can move 3% against you, and you can still profit on this trade. In fact, if it goes the opposite direction, you stand to make more. You stand to make the amount of the credit. If you're not taking notes, you're missing out. You stand to make the amount of the credit plus the width of these two. So this is $1 wide. So you'll always earn 36 if the price goes down at expiration. And then if it goes up, you should top out at 136. So the width, if you remember, is $1 here, plus the credit of 36 means the peak profit is 136. Now, the amount of loss is 164, which really isn't that much. So that would be the 164 and 36. What does that total to? 164 plus 36, $2, right? So your total risk here is going to be $2 minus the credit that you're taking in. Oh, hang on. I was one strike off. Sorry. But yeah, 65, 70, 66. So that should be 49 credit, a peak of 149, and then your total risk is 251. Yeah, thank you, Sebastian. I just noticed that. Thank you. So that makes the broken wing butterfly. $5 wide between the two that you bought, and then $1 between the two that you are making as a spread. Now, this should look familiar if you look at, exclude this. Oh, because that's 2. I was going to say this should look familiar. In fact, I could do this real quick. Change the quantity to 1. Yeah. So that is what this looks like as a out of the money call credit spread. But we don't want that. So you add 1, 2, 1. That's what that looks like. Now, that's on the front expiration. Let's add in a put. So add buy put. And we're going to change this to be the furthest strike over here. So essentially we're going to the same strike as the call, which would be the 70 strike. Let me move over to that. And then making it a little further out in time. So change expiration. You could go 1 or 2 weeks out. Either way, it doesn't matter. And what you see is that the current price still has about 1.6% that it can go against you before this trade loses money at expiration. Now, here was the part that I was really, really surprised by. Look at the break-even point, 66.39. If I move this put further down, it's basically the same. It doesn't change. Further in the money, it doesn't change. Closer to the money, it doesn't change very much. Once it gets out of the money, then it starts changing the profile of this trade. Then it starts changing this trade a lot. But where I'm going is that you don't have to make it super deep in the money for the long puts. You could even go 68. Instead of 70, you could go 68, which would save you some margin if you wanted. Changes the trade a little bit, but the lowest amount of profit is, I think at 48. Yeah, 48-ish. But let's say that the stock goes to 60. You'd make $500 on this one lot here. But if we take off the long put, so it's just a broken wing butterfly, your profit is only 49. This is why it's important to include the long optionality, because you make tremendously more than just the broken wing butterfly. Broken wing butterfly is only going to make the amount of credit if it goes down. But if you remember in the presentation, the reason we add these together is because it makes up for the shortfalls in this section here. You're layering these two trades on top of each other. So you're taking the long put, which doesn't profit in this area, adding in the broken wing butterfly that does profit in this area to get the golden spread. So that's the setup. Now, I was a little bit clumsy, I think, and a little bit slow on building this. But I'll tell you what, let's do on some of these that you guys have put through. And let's make them happen. Sebastian had some, Maria had some, Jared had some. All right, I'm going to start with Tesla because everybody loves Tesla. Tesla's on here big time, TSLA. Now, I will tell you, this doesn't work for everything. We in the trading room last Friday, I said, you know what? I think the market is going to be moving down, which it has been, like big time. Just taking a look at, oh man, did y'all see our X trade is down 5% today? That's pretty sweet. ACI. We've done really well this week. Back to this. So let's take a look at Tesla. And let's do this. I want to add in just a couple things. I want to add the 20, the 50, and the 10. So the way that I establish a trend is the 10 under the 20, price under the 50. So Tesla right now doesn't fit that criteria because the 10 is still above the 20, but price is under the 50. This to me is a sideways market, as you can see very clearly. It's a sideways market. But it does have a chance if it breaks through this area of, let's call it 270. If it breaks down through 270, who knows how low it could go. But we can still build this up. So let's go September 30th like we did. And let's go to at the money. So at the money on Tesla is a really random number, 276.67. Okay. So let's go to 276.67. Oh, this hasn't updated yet. This is a little bit behind. So this is delayed quotes, but that's okay. We can still build it up. This is the pricing on these is weird. 278.33. Who made these up? 278.33, 281.67. That's not even right. Hang on. I'm going to have to build it here and then put it on option strat. So I'm going to do 2 of the 278s, 1 276, and then $5 away. That's still $5. Yeah. Okay. So 278, 276, and then the $5 was 281. Do you see why it's important to have this tool? It's free and super cool. All right, Tesla may not be a great example because as you can see here, and you know what? This is actually a fair point. When you build these up, they don't always line up pricing wise, right? If I were to put this on right now, it says that my break even is actually below the current price. So when that happens, all you got to do is move these strikes over a little bit. So let's say 283, 285, 288. There we go. Look, that didn't take much, right? When you're building this up, when you're building the broken wing butterfly and you see, wait a minute, this is not what I expected. Not a big deal. Just move your strikes over and roll with that. So I have 285, 286.67, 290. And our break-even point is 2.6% higher. Not so bad, right? Now, let's add in our long put. So buy a put. So all I did was go to build, call broken wing, type in Tesla, go to September 30th, you know, basically 5 to 7 days out. Move around your strikes till you get the right setup that you're looking for. And then we're going to add buy a put. Now we're going to go and start at the same expiration as the long call, the farthest long call. We're going to change the expiration to be October 14th. Now look at this. The pricing does not work on this. So even though this is the golden spread setup to a T, this is the golden spread setup to a T, the pricing is important. I couldn't trade this. you couldn't trade this because the options pricing does not support this. That's okay. We have a strategy for this. Josh, that is an excellent question. We have we have total rules for entries and exits at the third part of this. We're still in the second part. So yes, we will definitely get there. So Tesla is one I would not trade for that reason. Let's do Apple. All right, let's remove this. And if you wanted to build it up in here, just to see approximate strikes, you go to September 30th, and then you could do, they have $2.50 strikes, which is fine. You could sell 2 of the 155s, so 2, buy 1 of the 152.5s, and then we'd want to go, in this case, we want to skip at least 1. So we'd go to 155 to 160. So this is $7.50 wide, but still accomplishes what we're looking for. So 52.5, 55, 60. So we want to build Call Broken Wing. See how easy that was? And go to 52.5, 55, 57.5. Oh, look at that. That does not fit what we wanted, does it? Did I do that? No, I need to move it to 60. Ah, that looks better. Now you're not taking in much credit on this side. So if the price goes down, you're only going to be making 11 bucks. However, if price moves up against your position, you actually could stand to make as much as 260, it looks like. Yeah, pretty sweet. And your risk in this trade is actually 239. Now let's say we want to add in our long put. So buy a put, move it to that long strike, and then change the expiration to that. What I thought was going to be a great setup turns out to not be. And even if I move this around, move the long put around, it's really not going to happen. Because what we want to see is this chunky area over here get back above into our profit zone. So Apple and Tesla, they are not candidates for us. That's okay. This is why this is really helpful. Can you see why? Let me just ask you a question. Can you see why it's important to be able to price this out before you put on the trade? Because you could just put in, you could follow the steps, step by step, put it on just like this, without even realizing, oh, it's kind of a junk trade. That's not what I wanted. That's why it's important to price this out before you put on the trade. Exactly. All right. Abe says coin. Let's try coin. All right, with coin, let's go to 7 days out. And at the money is about 61. So let's say we did 2 of the 62s, 61, and making it $5 wide total. It's a 95 credit. That's pretty good. So build, call Broken Wing. And that was 61, 62, 66. 61, 62, 66. Hey, so far that looks good. Look how much faster we can do this now. Going into your options chain, setting it up, getting about the right strikes at about the right place, and then coming in here. And then you can see what it looks like. Now let's say we want to add a put. Add, buy a put. Go to the 66. Change the expiration to be like the 14th. This one's better. But let's see if we can actually make it happen. Let's see if we go. If we move everything back 1 strike, does that make it work? Not quite. If we move everything down a strike, does that make it work? And it does. Do you see how flexible you can be with this? It doesn't have to be super difficult. You just need to take your time and say, okay, I want this setup. I want these characteristics of this setup. I can change my strikes a little bit. And then bada bing, bada boom. You got it. Now also, keep in mind, this long put, the break-even price is about 0.7. So it's not a huge advantage you get. You still get an advantage. But you can move this around, and your break-even price really doesn't change. And I'm telling you this because you don't have to spend extra on those long puts. So yeah, that's how you'd set it up in Coin. Let's see. There are a couple questions here. Let me answer these. Arabe says, when we should use a broken and golden option strategy? When we have high volatility. Let's say we have very good news or bad news and price changes rapidly. This is more trend following. I gave up a long time ago trying to trade volatility around options. It just wasn't working for me. So what I do is I'm trend following. And when I see a trend, let's take a look at Coin. When I see a trend, this is clearly a bearish trend. You've got the 10 under the 20, price under the 50. That's a bearish trend. For me, this is an ideal candidate for a broken wing butterfly. But if we do a broken wing butterfly, remember, your credit is the max you could make in this trade. So in this one, it'd be 134, which is pretty strong, actually. But let's say that it trends down and like continues trending down, and maybe it gets down to 40. If it gets down to 40, let me zoom this out a little bit. If it gets down to 40, you're still only making 134. But let's say you add in that put that makes this the golden spread. When you get down to 40, you're now up to $1,800. You went from 134 up to 1,800 by following the trend. That doesn't mean it's going to continue on. We don't know that. But we do know that by having this spread on, if it moves sideways and kind of chops around, this is still profitable. If it moves on the other side, for sure, it's time to close. But if it continues down, you're good. And it can continue down a long, long way. Baron says, oh yeah, great stuff. Cool. Dude, I'm telling you, when I was on the plane and I figured this out, I'm like, holy moly, this is a game changer. Josh says, is broken wing butterfly always 7 and always 21 on the long puts? It doesn't have to be. It does not have to be. That's where I start. And members of the trading room know this. I start at 21 days, and then I'll move closer to find liquidity, or I'll move farther to find liquidity. But ideally, is 21 days, because you want to have it on 2 to 3 times as long as your broken wing butterfly, your selling trades that you're doing. Your buying options trades want to be at least 2 to 3 times as far as your selling option trades. It's a great question. Josh also says, do you just look through your watch list and find stocks that fit your trend and enter the strategy? Kinda. What were we trading the other day? Maybe someone from the trading room can remember. It was ACI. ACI, that's Albertsons, down 2% today, doesn't have weeklies. So if I go to ACI, it doesn't have weekly. It only has monthlies. Because it only has monthlies, there's no way to pull this off. So I stuck with the long puts, which are doing pretty outstanding today. Oh man, the market's getting totally smooshed. 370, just so you guys know, was a key level that I was watching, and we just blew past it. We're at 367. If you want to find key levels on your chart, this is beyond the scope of this lecture, but if you want to find key levels on your chart, see where there has been, quote, resistance or support. Boom, boom, boom. 3 times it's hit at 370.50, and it just blew past that. So yeah, that was interesting. I didn't plan on talking about that. Follow-up question from Josh. How would I know to play this where it would be an A+ setup? Josh, the way that I would suggest you is find a way to run a scanner. So we have scanners in the trading room. Basically, it's all the moving averages pointing in the same direction. Your 10, your 3, your 5, your 20. If everything's pointing down, that's a bearish opportunity. Now, I'm not trying to hold anything back from you here, Josh. It's a bearish opportunity. And I use TrendSpider, and TrendSpider has a plan. If you use code 10minute, just like you see over my shoulder here, you can get 30% off any other plans. But the main objective as the scanner is just to find stocks that are all pointing in the same direction, up or down. And then when you find that, they're clearly trending in that direction. We don't know how long they will trend, but as long as they're trending in that direction, a put can work pretty well. But in 2022, as we talked about earlier, it's been choppy to down. So puts have been hard to make profits on this year. But by combining the Broken Wing Butterfly with the long put together, building this spread here, that's where you should get the A+ setup. Does that make sense? Great questions, team. Keep it coming. All right, let's look on. I'll do 3 more total, and then we'll move into the next section. And thank you all very much. Josh, he uses FinViz. Good, so he can run scanners. You might be entering the trend too late. Josh, we all have had that feeling. We all have had that feeling because, you see a stock going down or going up, right? How many times have you seen a stock like GameStop and you're like, wow, look at it go. Wow, look at it go. Wow, look at it go, right? And if you don't pull the trigger, you're still going to be sitting on the sideline saying, wow, look at it go. And we don't know how far it's going to go. But if you pull the trigger, know your risk ahead of time, which is the real key. How much risk am I willing to take? You could put on every trade. You could put on any trade. Larry Height, who I talked about earlier, one of my mentors, he ran a back test like in the 70s when it was basically impossible for people to run back tests. I'm sure he had a computer the size of this room I'm sitting in to run the back tests. But he ran the back test with completely random entry signals. And the only exit signal he had was some sort of spread. Maybe it was $1, maybe it was 50 cents, and said, you know what? If it continues on this direction, I want to get in. But I'll give it 50 cents to work against me. And if it works against me 50 cents, I'm out. So, Josh, that's my professional opinion. Is you can take the risk, but just know how much risk you're willing to take. And don't worry about the getting in too late. One of the other things that I learned over my years of trading was if a stock is going to go from 5 to 100, you can get in anywhere between 5 and 100, right? If it's moved from 5 to 15, you might be thinking, oh, it's too late. But if it ultimately peaks at 100, that whole time you would have wished you got in. So you can get in any point, but just know where you're going to get out if it doesn't work. I hope that makes sense, Josh. Thanks for letting me spend a couple of minutes talking about that. All right. Angela was next on the list with Oxy. Hang on a second. Sebastian's talking in the chat. I think it still works if you use 10-minute. Sebastian was just saying if you want to use TrendSpider, they offer 7 days and 50% off for 24 months. But if you use the code 10-minute, it should get you that same discount. So very cool. I didn't know that. Thanks, Sebastian. All right, let's go to Oxy for Angela. OXY. Oh, I drew a point on here at some point. Okay, Oxy. So this is clearly a bearish trend, Angela. So we have the 10, which is the blue line. Under the black line, that's the 20-day, and prices under the 50-day. I'm giving you guys so much good content today. I hope you all have good notes. So this is clearly a bearish trend. Let's go to Oxy's options chain. They do have weeklies. Let's go to September 30th and let's build this out. So out of the money. So I'm looking at 60, 61, 65. So let's go to Oxy here. Let's go build, call Broken Wing. Change these to be 60, 61, 65. Boom! That's a setup, Angela. Look at that. It can actually go up 6% from here to your break even. That's a really solid setup on Oxy. But what about our unlimited profitability? Add, buy put, take it to the 65, change the expiration. Let's go the October 14th. It's not going to work. Let's change it to October 7th. Not going to work. Let's change it to October 21st. Nope. While this does set up from a Broken Wing Butterfly, adding in the long put doesn't make it work. This is why it's so critical to price these in. And as Josh mentioned earlier, how do we get the A+ setup? The A+ setup is making sure you can make this work. Now, this doesn't mean don't trade this at all. The way that I would take this now is say, okay, well, since I can't make this work with the golden spread, I'll just keep the long put. I'll just remove the golden spread part of the broken wing butterfly and keep the long put. Not as good as having it all together, but I'm still going to be in the trade. So Angela, that was a great example. Ernie wants to look at AFRM, A-F-R-M, Affirm. Let's go to here, A-F-R-M, A-F-R-M. There we go. They have weeklies. Out of the money. So we go 20. Oh, this is a good example because these options are really inexpensive. 19 and 25. Okay. So let's do build, call broken wing. 19, 20, and 25. So the break-even point's 10%, Ernie, above the current price. 9.8. That's crazy. Let's add in our long put. Add, buy put at the 25 mark. Perfect. Look at that. In fact, let's even change this expiration to be the 14th. Oh my gosh, yes. Perfect example. So in the chat, let me know that you understand why we price these out before we actually get into the trade. Because if you just went on the options chain, you would not have the whole story. But by including one extra step in option strat, knowing what you're looking for, putting it in, as you saw, it took me 10 seconds on Affirm. In fact, let's do the next one. And Maria says FDX. Let's do FDX. Right? How long is this going to take me? I'm going to go to September 30th. I'm going to do 52 and a half. 50, 57. Okay. So I'm going to do build, call broken wing, September 30th, 52 and a half, 55. Did I say that right? Oh, no. I'll move it over. 50, 52 and a half, 55. No, 57. There it is. 57 and a half. Yes. Okay. So that setup was on easy. Now we add our buy put at 57 and a half. Change the expiration. Boom. Done. And it's perfect. That's an A+ setup. Pretty cool, right? Being able to know what to do and then looking at the chain, making sure the pricing aligns with what you need it to do, adding your put, boom, good to go. So yeah, let me know in the chat if this is making sense to you. Hang on. Let's see. All right, Abe asks, will this be live on YouTube? I would rewatch and try to use it. Thank you for sharing. You're welcome. So this will be available until Monday. On Monday, it does come down forever, gets archived as part of the 10-minute trading room. So it'll be available forever for anyone who joins the 10-minute trading room, but this will only be available until Monday for anyone else. Angela says, yeah, and sad face. That's okay, Angela. Just because that one doesn't work doesn't mean you shouldn't trade it. It just means that the long puts may be a better option than the golden spread. Angela's got 100%. Awesome. Does this work better with stocks or ETFs? So it really is all about just manipulating the pricing, right? It seems like stocks may work better than ETFs, but it also might be that on certain days, there's additional volatility in selling the spread and less volatility in buying the put, or some sort of trade-off, one or the two, that makes it work. But yeah, it's definitely dependent on the stock on the day. You can't always say that it's going to work in the pricing setup, but when it does, it's a golden spread. Josh asks, is there a stock criteria, certain volume? Oh yeah, Josh, I got you here. I go for at least 1 million shares traded daily. Sounds like you're building your scanner. Go for at least 1 million shares traded daily. And then on your option contract, When you're buying the puts, I go for at least 200 open interest. 250 is better, at least that much. If it's like this one that's 25, don't trade it. But if it's these that have got over 200, over 250, you're fine. But on the Broken Wing Butterfly, you will get, like, let's say you're doing the Broken Wing Butterfly on these strikes, you get combined open interest for all of these. So it should be pretty cool. Abe says, I actually made $100 on FedEx today with one contract. Way to go. All right. So that was the second section on how to set it up. Catch up with the slides here. All right, so that was the section and how to set it up. So here's the key takeaway from that section. Anyone can do this. Anyone can do this. It takes a couple extra steps. It takes another 60 seconds, another minute or two to make sure that this lines up correctly. If you're just buying puts, you could be potentially leaving money on the table by not including the Broken Wing Butterfly. That's really why I want to get across to you here. Like Angela on Oxy. The puts in Oxy are still legit. But the golden spread doesn't work. The Broken Wing Butterfly is still legit. But the golden spread combining the two doesn't necessarily work. So for sure. Abe says, you need to move from just calling puts to strategy. This is a solid strategy for you, my friend. All right, so anyone can do this. And if you think so, if anyone can do this, type a number 1 in the chat before we go into the third section. I spent a little extra time in this section making sure to make it work for you. And I apologize for going a little long on that, but I hope it was worth it for you. So type in a number 1 in the chat just to confirm to me that you understand that you can do this. And I believe in you. Mainly, I believe in you because this is what you got to do. All right. So let's move into the third section here. The entry and exit rules to maximize profits and minimize losses. This is really key. Remember, early on in the presentation, I said you need rules with consistency and discipline to follow them in order to make this work. If you do not follow the rules, it doesn't matter how great a strategy you have, it's not going to work. Here are the rules. But before I get to the rules, there's something that you need to know with trading. And this comes from one of my very favorite books of all time, Trading in the Zone. Most people, when they work a job, they have rules that say, hey, in order to accomplish your job, let's say you're a ditch digger. I mentioned that earlier. Let's say you're a ditch digger. You need to build it 4 feet wide by 7 feet deep. Or let's say you, geez, what am I trying to think of? Let's say you work at the Dr. Pepper plant, right? You need to press this button at this time to do this thing. But in the market, there's unlimited freedom. Literally unlimited freedom. You can do anything. You can put on puts, you can put on calls, you can put on calls and puts. You can sell them, you can buy them. You can buy 8 of one and 7 of the other. And nobody is over your shoulder telling you what to do. But because there's unlimited freedom, that really wrecks with people. There's not somebody sitting over your shoulder to say, hey, you gotta get out. It's over. This trade's not working anymore. That was the biggest drawback for me was when I was really struggling to be profitable. It was, oh, if I give this another couple days, maybe it'll come back. That's not really a strategy, Chris. Oh, if I give it another $1, then definitely it'll turn around. And of course, it blew past that $1. And I'll say, I'll give it 50 more cents. Blows past that 50 cents. And I didn't follow my own rules because there was unlimited freedom. And that's why you need consistency and discipline to follow the rules. Here's a great quote here. A trading edge, which is what we just talked about here, a trading edge and strategy will put you in the top 20%. Risk management of that strategy gets you in the top 10%. But emotional control to follow your own rules, puts you in the top 1%. So it's like the golden spread gets you to the top 20%. Entry and exit rules will get you in the top 10%. But it's up to you to be in the top 1% to follow those rules. Everybody's putting number 1s in. Thank y'all for that. Now, We're going to break down what my entry and exit rules are. Well, some of them, not the whole thing. This will take another hour. But this is what we look for in the trading room, right? We want to see the market moving in one direction. We want to see the charts moving in one direction. We want to find the relative strength. We want to make sure that we're getting, if we're going short, we want the worst stocks, not just stocks that are bad, but the absolute worst. We also backtest every single one before we put it on. We talked a little bit about liquidity, and then finally is position sizing. So this is our strategy, nuts to bolts, and how it goes in. But we're talking about trend and entry and exit rules here. So when we're looking at the trend, we're looking at a few things here. One of them is, in fact, I should pull these up. The market trend, we want to see below, sorry, on my other screen. We're looking to see the S&P 500 moving averages, the 10 under the 20, price under the 50. That should sound familiar. I've said that a couple times. We want to see on the S&P, the 10, which is the blue line on my chart, under the 20, which is the black line, and price under the 50. That's my red line. As you can see here, the trend is currently down, for sure. Next, we want to see the MMFI. This is our market breadth. And right now, the MMFI shows this is the percent of stocks above their own 50-day moving average. Just a second ago, we talked about, sorry, I have to switch between screens like this. Just a second ago, we talked about how the S&P was below its red line. Okay? The MMFI is the percent of stocks in the S&P 500 above their own 50-day moving average. I want to see it above 50%. And right now, it's at 11. Let's break that down. That means 89% of the S&P 500 is bearish. 89% of the S&P 500 is below their own 50-day. Nobody should be buying stocks right now. And then lastly, we look at FinClub. That's our artificial intelligence data that we use as a market timing tool. And let's go look at it for today, because legit, I have no idea. It is red. So our criteria for FinClub, it's a red light, green light situation, basically. Red light, yellow light, green light. Today is a red light. So today is an offensive day for our crew, because we have the S&P moving down. We have market breadth is terrible. And our FinClub, our AI data, shows anything other than green. So a red day. So today is an offensive day. So we'll be looking to put on trades today. So that's our entry criteria. So how about exit criteria? Now this is really important, okay? So with the broken wing butterfly and the long option, the golden spread. For me, my exit criteria are if it closes above the break-even point or expiration, I need to get out. So for example, please be sure you're taking notes. For example, if we were to put a trade on in FedEx, if it closed above the break-even point, which shows on here at 153.62, I'll close the entire trade. I'll take a loss, I'll move on. But there's no point in closing it if it's anything below that point. There's no point at all in closing it if it's anything below there. So I would let that expire. So beyond the entry point, or beyond that break-even point, or to expiration. And then if it doesn't get closed, or when the broken wing butterfly alone closes, because it'll expire first, keeping the long options and then using our other planned exit points. We're just going to get real deep real fast, so get ready for this. So when the broken wing butterfly closes and we're left with just the long put, what do we do then, right? We're taking off the broken wing butterfly. Now we just have our long put. What do we do then? Got you. Exit if either are true. So we have a selling into strength exit or a trailing exit. See that my head's in the way, so I'm going to move out of the way for a second here. A selling into strength exit is when the price touches the 5 EMA Keltner channel and closes higher than the previous close. That's a lot of words. What does that even mean? So inside of TrendSpider, I'm going to clean this up real quick and take out the drawings. Where's that at? Here. So there's an indicator that you want to use called the Keltner channel. It's, where is it at? Keltner channel. I like the 5 period EMA, ATR length of 14 and 1. So we're adding one ATR value to the current price, or subtracting one ATR value from the current price. When it rides along the bottom or the top of the Keltner channel, and then has its first close in the opposite direction, that is your exit signal. Let me show you what I mean by that. If it's riding along the top and then has its first down day, which would be this one, that's your exit signal. If it's riding along the bottom and has its first up day, that's your exit signal. If it's riding along the bottom and doesn't have any any up days, then you let it ride as long as it can. ACI is one that we're in right now that's in that position. We got in on the 16th, and it's riding along its lower Keltner channel, and it's not closing up yet, so we're leaving it on. Now that's selling into strength. There's also a trailing exit. A trailing exit is if it's not riding on these Keltner channels. Here's a good example. It's not riding on the Keltner channels, but it's moving sideways maybe. Or just not got the strength of the trend behind it. If it closes on the other end, if it closes on the other side of the trend line that we backtested, so here's a good example. If it closes on the other side of that backtested trend line, that's when we get out. So we have either selling into strength or a trailing exit. You can choose one, you can choose both, but you do need to make a choice. And the way that I make that choice between using one or the other is if it's running on its Keltner channel, let it run as far as it can. But when it starts to turn around on its first other direction day, so a first up day in this case, I'm going to go ahead and get out. Josh says, when would you take off the broke wing butterfly but not the long put? At expiration. At expiration. Take off the broke wing butterfly and leave the long put. As long as it's working. That's the only time where you would leave on the long put, but take off the broke wing butterfly. End of day. Always end of day. I never make any trading decisions midday. Mainly because, think of it this way, there's 390 minutes during the day. So that's 390 data points, if you really wanted to be pedantic about it, that you could use as justification to enter or exit a trade. Or you go at the end of the day, maybe the last 30 minutes or so, and say, okay, we're at the end of the day. I'm only looking at the end of the day's prices on my backtest anyway. At the end of the day, does this seem like it's going to close using my closing criteria, my planned exit points? No? Okay, I'll leave it on. So, but during the day, there's 390 different times you can make that decision. Ain't nobody got time for that. So I say the last 30 minutes of the day, these are swing trades. These are not meant to be day trades. So that's the way that I do it. And these are my actual exit points from our trading room. So here's the key takeaway here. And I need you to remember this. You're only as good as the rules that you can follow. You could have the best rules in the world, but you're only as good as the rules that you're actually going to follow. Or as good as working with a pro trader showing you the rules each day, which is the biggest feedback I get from members of our trading room is that, you know what, they don't have to think about it. We're just working through the rules every day. And because we're working through the rules together, they can see me holding myself to my own rules with consistency and discipline, executing entries and exits. So have rules that you can follow. That's the real key here. So yeah, that covers the majority of what we want to talk about. There's another section here I want to talk real quick, but that's everything that I want to share with you guys, which is how to ethically steal my golden spread formula or golden spread setup, how you can clone it in less than 10 minutes, and the entry and exit rules to make this work. Because like I say, trading is easy once you know how to play by the rules. And I want to talk about our friend Kavan here. Let me show you a video that I made with our friend Kavan.
It's from a consultation that I did with Kavan. I'm giving away free consultations for members of the trading room, and I just want you to hear exactly what Kavan says.
I'm watching these stocks today, and it's like I have Peloton and Fastly, and I'm looking at them and they're following the back test as planned. And I'm telling my friend Rob, and I'm like, yo, I'm happy. And he's like, why? I'm like, I finally found something, a setup that I can use. I can go in there. I don't need anybody. I can go in there and I can make the trade my own. I can follow your steps A to Z, and I can plan my trade. As you said, 10 minutes a day, no hassle, no headaches, ain't got to stress. And he's like, for real? So now I have him taking the previous course that I took because it laid a foundation for me. And I'm like, if you understand what these guys are teaching, then hop on over to Chris, because these guys are going to lay a foundation with the little fundamentals, like, like the basics. And then when you transition over to Chris, then you will start understanding a little bit more. So, you put in the roof on now. They build the foundation. I did my little thing. You put in the roof. I'm eventually going to learn how to put some furniture in the house. As you can see, it's empty. So that's the goal, man. And I'm loving every minute of it. And the way you teach, it's simplified. And I ain't got to sit there and draw no trend lines. I ain't got to look for no breakout candlesticks. Like, which candle is this at the end of the day? Is it a doji candle? And I'm like, I'll never learn to read candlesticks pattern. Like,
you probably know candlesticks better than I do at this point.
I literally don't know anything about them.
I'm online on Amazon looking for a good, candlestick, book to learn to read candles. I'm like, I'm not learning none of this stuff. I'm just going to pay attention to what Chris is doing. I put the lines on there, and dude, I take screenshots of them and I look at them every day, because yesterday I was showing everybody. Like, I called all the guys, because I have all the guys that come in the group is guys from my work. You got Josh, Daniel, Chris, and Rob. They happen on the live when I invite them over and they love it. I got everybody, asking questions. Daniel is on there asking a lot of questions. He actually went and got TrendSpider. So slowly by slowly, everybody's coming to the table and want to learn, because step by step is no stress.
Do you want to take this to the next level? Right? Type yes in the chat box if you're ready to take this to the next level, because I want to do something awesome for you today. Let me ask you a question. Would you like my help in implementing this in your trading? That's where the 10-minute trading room comes in. This will allow you to finally live the life you have always dreamed being a trader would be. We have daily live video calls, daily trade alerts, daily new trade setups, daily portfolio updates, daily market analysis, daily trading psychology, which is so important. And everything we trade together. So it's like getting a call from me personally every trading day, with what we're trading and why we're trading it, which is really the most important part. Every trading day. Plus, you can get rid of all the fake gurus that you're still following on Twitter. I know I was really guilty of that. Spending hours searching on YouTube for the next YOLO stock, scrolling on Twitter. Everything we trade together. So as a member, you get everything. You get the daily video calls for free. Your membership includes the daily video calls for free. The daily trade setups, the portfolio updates, market analysis, trading psychology, all that's included for free. And then every other Friday, just like you're doing right now, we do live training and Q&A sessions. Just like the one that you're watching right now. And we'll be building new courses together with your questions and your answers. That's so important to me. And these courses, like I said earlier on today, will be available for members only. You get to watch me personally showing you all the lessons that we use in these courses in our trading. And you can ask me questions as you need, right? You get it all. He's showing you what's working today, and it's like an up-to-the-minute field report sent from the front lines of the cutting edge of trading, and then showing you how to model it in your trading fast. And the only way to have access like this would be if I were to sit in the same room with you and you were looking shoulder to shoulder or looking over my shoulder with me every single day.
Now, here's what a few of our members have said, right? Robert's saying, your trainings and advice have accelerated my learning 10x. This allowed me to start doing things that were sometimes unthinkable. Listening to Chris is well worth your time, even if you're a seasoned investor. So who's this for? Well, it's for new traders. It's for experienced traders. It's for busy professionals, some side hustlers. Like I know I've got a couple of my 10-minute stock traders in there who are side hustlers, and then parents who just want to trade while their kids nap. And if you've never traded before, don't worry. Is it okay if I over deliver? As a member, you're going to get everything. You're going to get the live training video calls, and you're going to get the live training every other week with me. And what else do you need to be successful? How about my flagship course, the AI Stock Trading System? And in this, we go step by step on how to use artificial intelligence in your trading. And also, I'll throw in the Real Trades case study course and the bullish, bearish, and neutral option strategy courses. So you'll be all set up there. And you're going to get all of that for free. As a member, you get everything included. That's the daily video calls, the live training and Q&A calls, and the full catalog of our best-selling courses. Okay? Well, what else would you need to be successful? We have video courses. We have our private chat room. And you're going to be part of a small group of high performers that are across the world that share valuable information that the rest of the planet never discovers. You're going to get the latest cutting-edge trading tactics and strategies before anyone else knows about them, exactly like we talked about today, including the live video trade alerts, the live market analysis, the live portfolio analysis, the live trade setups, the live trading psychology. All of that is included, and the live training and Q&A calls, the live look over your shoulder trading setups, live trading courses built with your questions and your answers. All of this is included as a member. You get all of this. Plus, I'm offering this now as a member. You're going to get at least one free one-on-one consultation like what we showed in Kavan's video. And this is coming from me. Who am I? Here's a little bit about me, right? I went straight to the pioneers of successful trading. I learned directly from world-famous market wizards and billionaire portfolio managers. And last year, the first year of implementing our strategy, we had a staggering 172.41% return on the first year of execution. So I'm pretty excited to share that with you. Right, you're going to get all of this, including the private one-on-one consultation with me. Total value $5,488. Right now, if all this did was finally set you up to see how real traders are profitable, do you think that'd be worth it? If all this did was help you shortcut the Wall Street learning curve, which hurts so bad, skip all those costly mistakes that most traders make and take years to figure out, would it be worth that? If all this did would give you the ability to model our trades and cut out the garbage that you see on the internet, you know what I'm talking about, would it be worth that? So I had two choices. The first option was to go as cheap as possible to try and help, everybody out there. But the thing is that there are lots of freebie-seeking knuckleheads, the guys on Wall Street bets, right, that really shouldn't be trading anyways. But the second option, which we went with, is the little higher investment in yourself, in the program. And in exchange, you get my time and my attention, and you're going to get you set up to get the success that you've always wanted. What would that one perfect trade be worth to you? Do you think that if you develop the trades like I did, you get the same results that I did? For the right person, this membership should pay you, clearly. If you're like most people, you would tell me you'd probably pay for years of membership with just the proceeds of one single trade. I know a couple of people have already done that. You'd probably tell me that everything else after that would just be gravy. And that's why I'm sending you our total trading system every month, right? I want to make this an absolute no-brainer for you. And I take a lot of pride in helping our members win big and avoid the big losers too. And that's why this is worth $5,488, because you're here today. You're now officially a 10-minute stock trader. I'm going to give you a monster discount. Of course, I wouldn't ask you to pay $5,488. The monthly cost of being part of the 10-minute trading room is only $147. That's it. That's like $4 a day if you think about it that way. You're going to get the daily live video calls with me. You're going to get the live training and Q&A calls. You're going to get the full catalog of our best-selling courses, and you're going to get a private one-on-one consultation with me. Total value, $5,488. And the monthly cost, like I said, it's only $147. You can boil it down to $4 a day. There's no contract. You can cancel at any time. You've got two choices, really. The first option is you do nothing and not take this leap of faith. and continue to struggle, continue to search on YouTube, continue to search on Twitter, continue to listen to those fake gurus, the first option really is nothing changes. Or the second option, you invest in yourself. The second option is you learn how the market really works. The second option, you give yourself a shot. See if this works for you. Like I said, there's no contract. You can cancel at any time. But don't you think it'd be worth 147 to show me how we set up every single trade, every entry point, and every exit point, and like Kavan said earlier, step by step with no stress. Do you think it'd be worth 147 for you to come spend an entire month right here sitting next to me, looking over my shoulder on every trade we make? Well, that's pretty much what it's going to be exactly like. I'm going to walk you through every entry, every exit, and why we do everything. Personally showing you what's working and what's not. The daily trade alerts are meant to give you that exact same experience. And here's something else to consider. Do you think it'd be worth 147 to jump online with me twice a month to get all of your trading questions answered, right? If you have any questions, you just let me know. I got you. I'm here for you. I do this for you. That's what we do in the live training and Q&A calls. Plus, you can see your fellow members every day, and you can ask them what's working for them, right? And any of those scenarios sound like it might be useful to you, then this is clearly a no-brainer. You can still keep all the courses for free no matter what. You're going to get the daily trade alerts. You're going to get the live training and Q&A calls, the full catalog for our best-selling courses, and best really of all is to get you set up for success, the private one-on-one consultation with me. The work we do together can change everything. You know that. This can change your life. This is the wealth ripple effect that we're talking about. You'll be able to take our trade ideas and plug them into your account effortlessly because I show you exactly step by step. You connect with me and your fellow members on our live video calls every day. Help you get the guidance and the focus that you need. So take this offer and become a member today. Remember, you're under no obligation. You can cancel at any time, and you can still keep all the gifts for free. And here's a couple other bonuses I want to tell you about. Here's 3 fast action bonuses if you sign up today. I wrote the Secret Investing book, and I want to send you an autographed copy in the mail, plus the audiobook. I'm going to give you the step-by-step guide to our 10 Minutes to Freedom trading strategy, which we use every single day. And finally, our top stock list, which I update this every single day. So every day that you get this is exactly what we are doing in the trading room. So let me show you how to sign up real quick. Just go to 10minutetradingroom.com. Click this big blue button right here that says, click here to take the guesswork out of trading right now. Then you're going to go to the next page, and it's going to ask you a couple of questions like your name, address, and everything. Put in your credit card number to get started. Make sure that you put in your t-shirt size because I want to send you a hashtag 10-minute stock trader because you're going to be officially one of us, officially a 10-minute stock trader. So if you have any questions at all whatsoever, feel free to reach out to our team. We would love to help you out, love to get you set up, and love to get you as part of the 10-minute trading room. Thank you, everybody, for coming today. I hope that this was very enlightening, very useful, and I can't wait to see you inside the 10-minute trading room with us every single day, and in fact, later on today as we make our trades. Thank you so much. Hope to see you there.
I was muted. Thank you, everybody, for coming today. I hope you took tons of notes. Be sure that you go and rewatch this while you can, and double check to make sure that you send this to somebody else who's going to need it. Because as I believe it was Abay mentioned earlier, he needs a strategy, right? This is taking the concept of trading with a trend, trading with a strategy, having that high win rate and unlimited profitability, merging the two together and making some cool stuff happen. Maria, we have just sent Maria one of the new bear market shirts that I mentioned earlier. And thank you all so much for coming today. Angela, you're welcome. Josh, you're welcome. Thank you all so much for coming. I'll see you back here real soon. And I will see the rest of you inside the 10-minute trading room later on today. Talk soon. Have a great day.